Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the PowerShares QQQ, which basically is the ETF that represents the NASDAQ market. And I've left my lines on the chart so you can see how last week's report played out. And you can see that, again, last Friday, which is right here, I drew this diagonal line saying that we would most likely go over this resistance point and go a little bit higher, with this being my target price. And you can see that almost every single day this week we had green candles and we came within pennies of my target right there. So again, another accurate report. I would love to take credit for this, but it's the candle charts that give the signals. I just happen to be able to interpret those signals, particularly price and volume. So let's go to our forecast for next week. What does that look like? Well, I'm going to erase all of these lines right here, and I want to draw your attention to this volume bar. This is a lower volume bar right here on Friday the 12th, and although it's a green candle and we close close to the high, that tells me that there's a good chance that we can go just a little bit higher because we closed on that high. But the lower volume tells us that there's lack of enthusiasm on the buy side. So I think we could go a little bit higher, but eventually I think we could pull back towards the end of next week. And we're going to have to keep an eye on the volatility index and the other markets as well. One of the main reasons I'm not going all in on the buy side is because we still have a gap down here right around 133 for the Qs. And gaps, if you follow along with that strategy, gaps fill about 80% of the time. So it would not be wise to go with a heavily weighted bullish position right now when you have that gap hanging out below the market. Now, if we look at the diamonds, that's the Dow Jones Industrial Average ETF, ticker symbol DIA. I'll zoom in here. You can see, again, the market followed my trend line perfectly, where, again, if you review last week's recording, you'll see that I drew this line as a resistance line, basically from this high and this high, and I said that we would move up to test that resistance, and we did. And if you look right now, we went right to the penny on the 9th. That high for that day touched my line and came right back down. It's absolutely amazing how technical analysis works with regard to forecasting the markets. Now again, what does that look like for next week? We're going to read the signals here, and I'm going to show you that the volume is playing a very important part in this equation. The volume gives us an indication as to what the motivation level is behind the trend. So we see that towards the end of the week we pulled back and the volume dropped. This is a very small bodied candle, so that again shows lack of enthusiasm on the sell side. And Thursday's candle is known as a hammer pattern. This basically came very close to filling that gap. I think we could see just a little bit of a rally. I think we're in a trading channel right here. If you look at this high, you could draw your textbook trading channel right there. So I think we're going to go up on the diamonds before testing this resistance again, and then maybe the following week, which is expiration week for the option traders, we might see a pullback. But I'm going to leave that line in there for next week so you can follow along. Now, if we look at the Russell 2000, which is a broad-based index, you'll see that the market moved up halfway up my trend line right here, and then came very close to a bearish engulfing pattern right here on Thursday. But the good news is, if I erase all these lines, the good news is we are right at a key role reversal support level, which I'm going to draw for you right here. See this high, we came up to a resistance area and came back down. This high right here, once broken here, will now turn into support here. I'll give you some websites to go to review the role reversal and how that works. But this tells us that there is support right here in the Russell 2000, so we could see a little bit of a move higher early in the week. And as I get to the volatility index, you'll see why the volatility index also supports a little bit of a bounce here. So I'm going to leave that in place right there. Now finally, if we look at the S&P 500 ETF, you see that we came right up to that resistance line. Again, just like we forecasted on the Dow, the resistance line was tested, it held, and then the market came back just a little bit. Now what we're going to do is I'm going to say that we're going to pull back just a little bit right here, and then I think we can go right back up to test that resistance. So I think, like the diamonds, we could very well get stuck in a short-term trading channel right here, and we will have to wait to see if it breaks out over resistance or breaks down below support. Now again, the VIX, we talked about that. The volatility index moved exactly like I said it would. Remember, I said it would move down earlier in the week. It did. It hit my target perfectly, and then it started to bounce right here. So my forecast for the VIX is going to be a little bit intricate, because what's happening is the VIX gapped up just a little bit. So I think next Monday or Tuesday we can pull back just a little bit here, and then we'll see a little bit of a rally. Now remember, the VIX is a contrarian indicator to the S&P. This gap right here, and I had this recorded last week, this gap has a high percentage of chance of filling. 100% of the gaps on the VIX have filled over time because it's an oscillating indicator. Don't want to get too complicated with that, but it's not a stock. It's a measurement of emotional volatility put out by investors, and we are at record low levels on the VIX, which tells us that the investors are very relaxed. They're not stressed. But guess what? That's usually what happens at market tops. Investors relax. They don't buy anymore, but they don't sell anymore. They just sit back and look at their portfolios and enjoy the ride. But that is usually a sign of a market top. So although we do buy from time to time on these signals, we are cautious buyers. Long term, I think we're in for a very big correction, as we are still in the second longest bull market in American history. So eventually that trend has to break, and we'll see a correction eventually. So I said that I would show you where you can go to learn more about the role reversal. You can go to themarketguys.com. It's www.themarketguys.com right there. Click on the video tab right at the top of the page, and that will bring you to our video library. If you scroll down just a little bit on this page, you will see that we have the role reversal video right there. It's a very short video, about 6 to 7 minutes long. Of course, you can go through all the other videos, they're very short. But the role reversal is what I'm talking about today, and something that you have to pay very close attention to, especially if you want to learn good ways to manage risk. And that line helps you with risk management. So that's it for this week. Have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.